We are seeing some negative bias on the stocks that have exposure to the US in terms of their revenue. There are caveats on whether they are actually manufacturing, then lots of ifs, but they are trading in the red. In this pharma space, you have companies like Dr. Reddy, Lupin, Sun Pharma, Cipla and Torrent Pharma that have US exposure. As per FY24 revenues, you have Dr. Reddy with the highest exposure at 46%, followed by Lupin at 37% and a Sun Pharma at 32%. The next sector that is in focus is the auto ancillary space. You have Sona BLW with the highest exposure to the North America region at 40% as of FY24. Samvardhana Motherson's 18% revenues in FY24 came from the North America region, and for Sansera Engineering, direct 10% from the US in FY24. In the forging space, you have something like a Bharat Forge, which has 25% exposure to the US in terms of revenue, and a Ramkrishna Forging, which has a 58% exposure to the North America region. Then you have the tire space. You have something like a Balkrishna Industries that has a direct 16% exposure to the US as of FY24 in terms of revenue. In the capital goods sector, you have something like a Shilza Tech, which has a 21% exposure to the North America region. In engineering, you have Tega Industries, which is actually seeing cuts of 2% today. It's has a 15% exposure to the North America region. And lastly, you have Worry Energies. 50% of their FY24 revenues came from the US, and that's a large growth market for them, but they are building capacities there. Lastly, in the textile space, companies that have significant exposure or do send textile to the US is an Arvind. You have a Wellspin Living, you have a Trident, Alok Industries, Raymond, and lastly Gokuldas Exports. And I also want to mention that the US also imports 5 major molecules from India. The little complicated names, but there are 3 industries that 3 companies that make these molecules, and that's a PI Industries, UPL, and a Jubilant Ingredient.